So it's March 2021 and the real estate market has gone insane. Hello, Alex Peters. How are you?
I'm doing all right, James. Hanging in there. How about yourself?
I'm good. So obviously we chat every month and give everyone an update on the real estate market, interest rates. And for me, things have been just ridiculous. That this housing market is just absolutely insane at the moment. We'll explain why. And what's really interesting is obviously we've had really low interest rates for a long time. We've still got really low interest rates, but they're fluctuating at the moment. So I'm really interested to hear what they are like today.
Yeah, today was another not so great day in the market. We were having a great morning, and then the Fed chair, Powell, spoke. And when he was speaking, he was talking about all kinds of things like inflation, and it sent the bond market into the wrong direction. If you want low rates, the stock market, even some cryptocurrencies started falling off as well. But bonds have tanked. The 10-year Treasury yield has increased, which means rates have increased. So a month ago when we talked, I would talk about FHA and VA being at 2.25. Maybe I could even pay some closing costs at that rate. We're now at 2.75. I might be able to pay
increase. Yeah,
0.5%. So what's important for anyone that's listening out there, if you are already pre-approved or working with a lender and you were doing a government loan, FHA or VA, and you were maxing out, you were qualifying, you were looking at homes at the absolute max level, check in with them, because if the rate's higher, that means you may not qualify for the same level because the payment's now gone up for the same type of house.
If they're already in escrow, and I gather most people will have the rate locked in, so they should be okay.
Yeah, a good loan officer will lock the rate in right away, which our motto here is if they like it, we lock it, meaning we presented the numbers on day one. If they like it, we get it locked in right away. And of course, right now, the message is to the client, we're in a volatile market. We highly recommend locking in. One thing that we can do, and I know a lot of other lenders can do it too, is once they're locked in, if we do get a situation where the rates flush back down again, we can take advantage of that. You're not stuck at that one rate.
Locking in the rate then, whatever, because if you know you can then take it if it drops again, then the win-win.
Exactly. And something that Homebridge does, which is a total pitch on my part now, is that we have a lock-in shop. So once we get someone pre-approved, we can issue disclosures and lock them in for 60, 90, I think even up to 120 days. Actually, I think it's longer than that. I think it's even half a year, where they can be out shopping and their rate is committed. They're committed at this one rate, but if it gets better, obviously we can just use whatever the market is. However, let's say we did the lock and shop at 3.25, rates rise to 4%, that client's not worried about it.
So with what they said today then, are we looking at rates rising over the next year? Is this going to be the start of it? Obviously, we don't have a crystal ball. We don't know what's going to happen, but is there a good possibility that they could rise again?
Yes. A lot of projections that the 10-year Treasury yield will continue to rise, which is one of the big indications on interest rates. I've been saying it that I thought it was going to happen possibly second quarter, third quarter of the year, that we'd start to see a significant rise. But it's already started to happen, and I think it'll continue. There's projections that the 10-year Treasury yield, it trades at like 1.5 right now, 1.5 basis points essentially, or 150 basis points. They're talking about that possibly rising to 3, which then trickles down to our rates, which means rates could rise a significant amount. But when they say it could rise to 3, they're talking about it over the course of the next 2 years.
Now, the funny thing is, a lot of people may see this as bad news. The truth is, in my opinion, this is absolutely amazing news. And I'm going to explain why. I'm working with a ridiculous amount of buyers right now, and they can't get their homes. You know, I've got one buyer, my best friends, we are writing offers over and over and over again. I think we've written 12 offers now. We're probably averaging around 100,000 over asking price. A lot of them have been 200,000 over asking price. And we have removed all contingencies and we still can't get a house. It's just been ridiculous. These are the homes they're purchasing in Carlsbad and San Marcos, you know, good schools, 4 to 5 bedroom homes, around the 3,000 square foot mark. In that, you know, 1.25 to 1.5 million, the market is crazy. Don't get me wrong, it's crazy in pretty much all the markets, but in that particular price point, it's just gone insane. Now I'm happy because we've got so many buyers on my books who, yeah, they're going to have to pay a bit more interest rate than they were before, but this hopefully will mean that we don't have 25 buyers at a certain price point. Hopefully that might mean that a few people can't get the loan at that price point, so there's less people, and so hopefully buyers haven't got this unbelievable stressful time that we've got now of losing out after home after home after home. And hopefully this means that, I don't think we're going to get this massive drop in prices straight away, but houses that were going for 6 months ago 1.25 are currently going for like 1.5 million. That is how crazy things are right now. Hopefully this means maybe they go for 1.3, 1.35. Even that would be fantastic. So I'm really excited. I want interest rates to rise because we need to have some normality back in the real estate market. And I've been saying this for a few months now. You wanted to sell your house. Now is the time. We are getting to the point, in my opinion, where you might have missed, I think there's a little bit more time left. I still think we're in this golden period where you can get a ridiculous amount for your house. And these are the signs that are saying to us that may not last for that much longer. Now, if you're looking to buy a house, the funny thing is I've studied this and I've studied this and I've studied this, whether the housing market is going to crash. Is this the same as 2007? Doesn't look like it is, because the truth is back then they were giving away loans to everybody who could, you could just say, oh yeah, I earn $1 million a year. Okay, here's a loan. Everyone was getting 100% loans, all sorts. Right now, most people have got really good equity in their home. They've got an interest rate, they've refinanced, they've got this amazing interest rate. People don't need to move. Yeah, there might be some foreclosures coming out because of the situation, but it's not going to be like in 2007 where everyone is going to be foreclosing all over the place. We don't know what's going to happen, but my opinion is if you're going to sell now. If you're going to buy, you've really got to look at the numbers, because if you look at the numbers, and this is where you've got to reach out to Alex and say, I'm looking to buy this house, and have a conversation about how long you're probably going to stay in that house for. If this house is going to be for 15 to 20 years, you can literally look at the numbers and say, if it's at 2.75, which it is now, what if it goes to 4.5 as an example? Maybe the house drops $200,000, right? So you get the house $200,000 cheaper. What is my interest payment over that period? The funny thing is, it's actually scary that a house dropping a ridiculous amount of money is still less profitable over, say, 20 years than if you get the low interest rate.
Right.
Am I correct?
Yeah, no, I've done that math before, so I know that part's correct. One thing I did want to clarify is the interest rates I gave so far were just for FHA and VA. Yeah. Conventional rates, when we last spoke, were anywhere from 2.75 to 3.25. Those have risen to, we're looking at 3.25 right off the bat right now. And that's for like good credit on a single family home, with at least 5% down. If it's a condo, you're probably looking closer to 3.3, 3.5% off the bat, right, to start with. And then jumbos are at 3.25. Depending on the situation, it could even be up to 3.75% if your credit's not so great or something like that.
For most of the last year, you've been able to, on a bad month, get a 3% on like a jumbo loan, for example, or a conventional loan. A lot of the time it's been around like 2.75, right? Yeah. So now we're at the 3.15, 3.25, type areas. So that's going to hopefully make a bit of a difference, because a lot of the buyers that I'm working with right now, they're like, we want interest rates to go up because we want to get a house, and hopefully that will help.
Yeah, I think it will. I think though it might take a little bit of time to see the benefit. But one thing I want to just kind of re-emphasize: rates are still insanely low. We back up 1 year ago to maybe today. The rates are pretty much the same place that they were, maybe even a little bit lower by like an eighth. And if you were to tell me 2 years ago that we're talking about 3.25 again, I would have been stoked. I would have been super, super happy. June 2018, rates were high fours, low fives a lot of the time. So these are still historically low rates. It's still insanely cheap money. And talk to me about like securitizing your rate while you go out shop. You know, if you're going to take 3 to 6 months to shop for a house, and you're worried that the rates could go to 4%, let's get you locked in at 3.25 and get you out shopping with confidence.
Yeah, the funny thing is I spoke to a massive investor that buys a lot of homes recently, and I was chatting to her, and I was just like, "Are you worried about because they flip a lot of homes?" And I said, "Are you worried about the market dipping?" And these are people that are very knowledgeable, and they said there might be a correction, and what we mean by that is not a crash, but that the market might stabilize soon because interest rates may rise, more properties may come on the market. And they're like, we're not bothered at all. Say, for example, we buy a house and at one point it goes, do you know what? We're not going to make the money we want on this flip. We can get an unbelievably low interest rate and just rent the place out. So what's really interesting is people that are doing this every single day and spending a lot of money buying and selling homes, they're absolutely loving this market right now, because even if there is a slight turn, they're like, we've still got this low interest rate. And that's what people have got to realize. The reason why this market's so insane at the moment is because even if the prices do drop a little bit, if you don't need to sell that house, it's like, having money in stocks and shares. You haven't lost money unless you take out the stocks and shares. So it's one of those that even if house prices dip a little bit, if you've got this unbelievably low interest rate, in the long run, you're winning.
Yeah, and I'd comment on that to say, if you look at historical data, which is, I think, really relevant and important, and I was having this conversation with one of my closest friends recently about he's going to buy a house soon. He's worried he's buying at the tipping point of the market, like the very top of the market. And I explained to him, I showed him some graphs of 2006, 2007, and then what happened in 2008 and thereafter. And I think it was around 2014, 15, maybe it was 2016. The house price rose higher, significant amount than the level it was in 2006 and 7 pre-crash. And so my question to him was, how long are you going to stay in the house? Is this going to be a home you stay in for 5, 6, 7 years? Or is it going to be something that you're trying to stay in for 1 or 2 years? Because if it's 1 or 2 years, then yeah, maybe it's something to consider about waiting if that's your goal. But if you're staying in the home for the average amount of time a Californian does, just 5 to 7 years, I honestly still think if there is going to be a correction or a peel back on prices, you'll still be able to sell that home for more in 5 to 7 years than what you're paying for it today. That's my opinion based off of historical data.
Yeah, and also, as we mentioned before, you just got to work the numbers out. It's one of those you've got to think about your situation. This is a big thing as well. I'm currently renting because I was convinced that house prices were going to drop in September, and I thought it was stupid to buy back in September. And we were chatting every single month for almost a year now, and I've kept saying they're going to drop, they're going to drop, they're going to drop, and I would have made a decent amount of money buying that house in September and selling it now even. But I decided to rent, but it's annoying renting. It's we've got stuff that we'd like to improve in this house, and we can't because we're renting. Owning a home is an amazing thing, in my opinion. You just feel so much more secure. You know that they can't suddenly sell the house underneath you. You've got that security. You can do it to everyone, and you can build equity in your home. For me, buying a house is the best financial investment that you can make. It really is a great thing. And I'm desperate to do it, and I made a mistake not buying before, and now I'm in a rental for a year, and I've got to decide what to do when that year comes. We'll wait and see. But you've got to think about your situation. If you're like, we're going to be moving out of state in a year's time, probably just rent for another year and waiting to see what you're going to do. I'm not going to force someone to buy a house right now if it's not right for them. You've really got to think about what's right for you, work out the math, speak to someone like yourself, Alex, in regards to what your monthly payments are going to be. Because like right now, I'm in a place, if I bought this place back in September, my monthly payments would be lower than the rent. So I'd be saving money at the moment, and I probably would have made 10% plus on my money. So I made a major mistake. So don't, it's one of those that we don't have a crystal ball. We don't know what's going to happen. We do believe historically interest rates are going to rise. Historically, house prices are going to rise at some point. We have dips and they go up and they go back down. But look at your monthly payment, and if you want to buy a house and the monthly payment looks good, then pull the trigger.
Exactly. Couldn't agree more. And I would say to you, you didn't make a mistake. You did the best with the information you had at the time. So you made the right decision.
No, it was a mistake. Should have bought, but there you go.
Hindsight's always 20/20 though. So
yeah, exactly. Well, thank you so much for coming on, Alex. I'm very intrigued what's going to happen over the next month with interest rates, and the best way of people, finding out what the interest rate is that particular day and stuff is to reach out to you. So how are best people reaching out to you?
Best way I would say honestly is a phone call or a text. You can send me an email as well. My cell phone number is 760-224-5510. And then my email address is alex.peters@homebridge.com.
And if anyone's looking for a house right now, or at least thinking about it, the best way of looking is we've got a website with all the properties. If you're using another website, all the websites have the same properties. They come from the MLS. Ours is homeiscali.com. And you can actually look at properties not only in San Diego, but in Orange County, LA, Palm Springs, etc. If you're thinking about buying a house here or anywhere in California, then we would love to help. So thanks for coming on, Alex.
Cheers. Thanks for having me, James. Appreciate it. I'll talk to you soon.